Have I made a huge mistake? Are crypto prices destined to go much lower from here? With crypto prices bleeding to the downside, market sentiment at lows I haven't seen for years, and terrifying tariff news on the horizon, it's understandable why many people are flipping bearish right now. This is further compounded by people telling you that we can't go higher until quantitative easing comes in from the US Federal Reserve, and that's something we might not see until September. But I'm here to tell you that I don't agree with that. That yes, QE is beneficial for crypto, but by no means essential in seeing us go higher much sooner than you think. And in fact, this chart is the key to understanding why crypto prices are going to go higher and lower on any given occasion. How we can see exactly what caused the top of the last bull market before the bear market took over, and how we're able to understand that the crypto prices are likely to head higher much sooner than many people give them credit for. So without further ado, hit the like button and let's find out why I'm still bullish. Now guys, looking across to the crypto charts, looking across to Twitter and YouTube, it's easy to understand why many people out there are absolutely shitting themselves. The crypto chart looks pretty scary right now, and we've seen this tariff news come out from Donald Trump. It's all looking pretty negative. The sentiment on Twitter right now is some of the worst I've seen since the FTX crash. Now, the reason most people are panicking so much right now is the people they've been relying on for the information about where we're headed have suddenly changed and flipped to another angle, saying that they're now bearish because of this and that. So I wanted to address that and give you a full understanding of the bear's argument versus my own argument as a bull, so that you can gauge for yourself the right decision for you. Because if you understand what I'm going to teach you in this video, you're going to have a very clear vision of what we can expect ahead in crypto, and this is going to make it far easier for you to make crypto investments at the right time. So let's get on with it. Now, I believe that this incredibly worrying and terrifying looking chart is going to solve all of the problems about understanding where we're going and what is exactly behind the crypto markets, rather than what is being perceived to be behind the crypto markets. So let's understand the key argument takeaway here. There is an argument from people right now that we can't go any higher until we see quantitative easing from the US Federal Reserve. This is basically saying that the US interest rates, US quantitative easing and tightening is what is directly affecting the crypto prices. On the flip side, I'm saying that global M2 is affecting the crypto prices, and I'm going to prove it to you in the best way that I know how. First things first, let's understand what quantitative easing is and quantitative tightening is. Now guys, I never promised that this was going to be the most mind-blowingly entertaining video of all time, but guys, just so essential. Okay, so if you stick with me through one video, make it this one. All right. First things first, let's understand the argument that people are presenting. What is quantitative easing? What is quantitative tightening? Well, these are two monetary policy tools used by various different central banks around the world. And the one we're most focused on right now is the US, United States Federal Reserve. Why are we so focused on that? Well, it's obviously got the biggest economy in the world, which is important, but also because the US dollar is the central reserve currency. All other currencies are traded against the dollar, and basically this makes the dollar and what happens to the dollar incredibly important. Now, governments go through good times and bad times where they need to strengthen their economy or just kind of cool it down so that it doesn't overcook itself too fast. Right now, we've seen the US Federal Reserve going through a period of quantitative tightening. They have been reducing their balance sheet, and they've done this through two different ways. They have put interest rates up incredibly high, up to around 5.5%, suddenly reducing it down to around 4.5%. And they've been doing this ever since June 2022, which is a key date to remember. And in addition to this, they've also been carrying out quantitative tightening, where they've been reducing their balance sheet. So what on earth is a balance sheet? Now, if we think about the Fed investing in its own economy to try and kind of grow it, it does this through periods of quantitative easing. So it goes and invests in bonds, etc., and it grows its balance sheet. In quantitative tightening, it starts to sell off those assets, shrinking down its balance sheet. Up until recently, it was shrinking it down at a rate of around $25 billion per month. In the last meeting, they announced that they would shrink that number to $5 billion per month. So while we are not into quantitative easing yet, the tightening is reducing and we are moving to a more favorable environment. Now, obviously, during periods where the interest rates are low and they are stimulating their economy, it is good for businesses and overall economical conditions in the US. Not only that, but also other countries around the world also benefit from that stimulated economy because it means they can stimulate their own economies. It means that life and conditions in different countries feel a little bit easier and ultimately is good for crypto. I'm not disagreeing with it. It is good for crypto for sure, but it is not that correlated, and I'm going to prove it to you. You see, this was June 2022, and up until the end of last year, interest rates were cranking higher and higher, and at the same time, the Fed was reducing its balance sheet. So the first thing to do is to jump across to the Bitcoin chart and ask ourselves, where were we around June the 23rd, 2022 with regards to the Bitcoin price? And as you can see, we were somewhere between $20,000 and around $17,000. This was not necessarily a particularly nice time to be in crypto. I believe it was just before we got into the Luna crash drama and then obviously the FTX crash that completely finished everything. But since that period of time, Bitcoin has gone from $20,000 all the way up to around $109,000, which is around a 4x from where we are right now. And in fact, the total market cap of crypto has gone from being worth $800 billion to being worth $2.6 trillion, again a 4x, which is pretty good considering that the tightening conditions have been horrendous. So in order to believe that we can't continue higher until we get quantitative easing, you would have to argue that from June 2022, we would have expected the crypto markets to continue lower if they were so correlated that high interest rates and quantitative tightening equaled worse conditions for crypto. And yet you can see that these don't really correlate in any way. And there's a reason for that. Quantitative tightening and quantitative easing directly affect something called the Global Liquidity Index, which is not the same as Global M2. Global Liquidity Index, Global M2. Global Liquidity Index is closely linked to quantitative easing and tightening, while the Global M2 is not. And this red line here demonstrates to you the Global Liquidity Index, which you can see has been sliding towards the downside quite aggressively throughout this crypto bull market, showing that they are not really correlated at all. And while yes, there is a spike towards the upside, which is going to be potentially beneficial in the long run, it doesn't really have much impact on the now in the crypto markets. Okay, let's just take a breather. This is pretty intense. So where have we got to so far? Well, quantitative easing has been going down while the Bitcoin price and crypto has been going up. So while yes, in the short term, we've had a bit of a dip in crypto, you would have to see that in this period of time, crypto is up. Even the most bearish of the bears has to agree with me that Bitcoin is up in this period of time and this global liquidity index is down in this period of time. But how do we know that quantitative easing and tightening are linked closer to global liquidity index than anything else? Well, it's because of this. The global liquidity index measures the balance sheets of central banks, repo markets, FX reserves. When a central bank starts to do QE, they buy bonds. It expands its balance sheet and that gets directly related and pushed into none other than the global liquidity index. Now, this is a global liquidity index, so it's been going down obviously because the US has been tightening, but other countries around the world, China, etc., have started to stimulate their economies, which is why we're seeing it go up a little bit here. Doesn't mean that it's necessarily going to go anywhere anytime soon, and potentially we don't see QE from the Fed until September, like I said. And in my mind, this is half the way to proving that quantitative easing is not necessary to see the bull market push on higher. But instead, what correlates closest to crypto performance isn't the global liquidity index, which is fueled by quantitative easing and tightening, but it is instead fueled by global M2. So let me quickly explain the difference between global liquidity index and global M2. Now I know you're pumped. You want to know what this chart's about and how it's going to really show us exactly what's happening next. Stick with me, guys. Let's understand a little bit. This black line is global M2. If we compare global M2 with the global liquidity index, which is the red line, you will see that they are not the same. In fact, while the GLI, global liquidity index, has been falling, Bitcoin's been going up. And while the M2 has been rising, Bitcoin has been going up, which is why I think M2 is the closest in terms of correlation. But I'm going to show you the key to breaking down this indicator to give you the real clues behind what drove this Bitcoin bull market and what finished the last bull market. So in order to tell you what the global liquidity index is versus the M2, I'm going to give you an example. I want you to imagine a shopping mall. It can be wherever you want in the world. I don't care. There's two different scenarios, and I want you to think about the people that are in this mall on any given day. Why do people spend money in a shopping mall? Obviously, they want certain things, but depending on how much money they've got at any given time, depends on how much they're going to spend. I want you to think of the shopping mall as crypto or Bitcoin, basically because malls typically are full of items that you don't necessarily need, that you just kind of want to buy. Now, if the global liquidity index is high on any given day, and we start to see quantitative easing coming in, pushing that global liquidity index higher and higher, then what it means is the banks, etc., in the country that that mall is, are able to serve bigger loans to people within the mall. Maybe they can get bigger mortgages, etc., which is obviously potentially beneficial down the line because people can borrow more money, which means they might feel like they've got more money. Global liquidity index is more about the capacity for potential growth, more about the capacity to be able to get hold of money without actually having to get hold of it. Hopefully that makes sense. It's basically saying the people in the mall have the ability to borrow more money, but it doesn't mean they're going to borrow more money. On the flip side of things, when the global M2 is going up, people in the mall have more money in their pockets, which means that they're more likely to go and make purchases within that mall compared with the people who potentially can get access to more money down the line. When we've got more money in our pockets, we tend to go and buy more things. Typically, you don't tend to go and buy Bitcoin instead of buying food and your rent. If you did that, then that's probably a bit of a silly move. But you know what I mean. Investing in Bitcoin is kind of like a luxury for us out there. And since there's a far closer correlation between people being able to actively spend money in economies versus the Bitcoin price, I think it makes complete sense as to why we have been moving with this particular trend. Now, those of you who've been subscribed to my channel over the last few weeks and months will be saying, well, yeah, but you showed me 70-day correlation versus the 105-day correlation. And actually, you probably realized if you tried to make one part of it fit, that actually the other part didn't fit. And if you go to other parts fit and they didn't. And a major argument for many people is, well, yeah, but it only correlates since Christmas 2023. So why does it continue to rise while the bull market topped in the last bull market around the 8th of November? And I found the reason. You see, this global liquidity index is made up of global entities, not just one, but US, Euro, China, Japan, UK, Canada, Australia, India. Now, these are slightly smaller economies down the bottom, but the major players in this game are the US, the EU, Chinese, and Japan. And I'm going to prove it to you. Now, by switching off the global and setting it to the US M2 only, then you can see that this doesn't really correlate that nicely to the Bitcoin chart. You can see that we continued to grow and liquidity continued to flow into the economy from the US way beyond the last bull market top. It then sort of started to dip into kind of very recent times, interestingly enough, and is now starting to slowly pick up once more. Many people are saying that this can't pick up very much because of QE and QT or whatever else. But there are other countries out there besides the US who are willing to go and invest in crypto. And for those of you who didn't think that the global liquidity index hinged very nicely on the last bear market, here's why. This is the Euro M2, okay, on this chart with a 10-week delay. Now, in order to get this indicator, you just need to go to M2, money shift, okay, and then just select this one here, okay. And now what you need to do is basically I added lots of different ones, and then I added EU or US or M2 or whatever, or just selected all of them. Okay, so this is what you want to do if you want to get this same chart up. Now, the important thing about this is that M2 front runs crypto by 10 weeks. Whether it front runs by 15 weeks or 10 weeks, I'm pretty confident 10 weeks. I'm going to show you why. But look, you can see that the liquidity starts to increase here for the EU. But the key is we get this data ahead of time. So we can see 10 weeks ahead what the likely moves for crypto are going to be. And I'll come to that later on. Now, for those of you who are wondering what happened in the last bear market, you might notice this very closely correlates to the EU liquidity. Say, you see it rounds off here. It then dips. It comes back up. It puts in this lower high on the very day, pretty much, that the bull market topped. And then it carries on lower from here, in line with the euro. Not with the US, but with the Euro M2. Also, another one. This is Japan M2. Japan's M2 topped up here, and then it dumped very nicely. Probably not that nice if you were there. And then it puts in again a lower high here, and then it sells off like this. This caused the bear market. Japan's M2 and the Euro M2 fell off the face of a cliff, and it did this on pretty much this date that caused the dip to the market. Now, another major argument for why it wasn't QE and QT that started to cause the end of the last bull market is because the last bull market finished around the 8th of November, and yet QT didn't even arrive in the system until sort of April, May kind of time, where we suddenly see the global liquidity index falling off the face of a cliff. So yes, it's beneficial because it continues to rise along with the bull market, but it's not essential to this. Now, in order to add the 10-day delay, you just need to go to inputs and just make sure that you write the number 10, okay, and select weekly. If you go to day, you need to add 70 or whatever it is. Now you can see this US one is continuing to rise. All of them, pretty much, are continuing to rise. This is China in the red. The black one is overall, and this one is Japan. While the Japanese one has been down more recently, you can see that it is starting to show a little bit of a peak here. Whichever way you look at it, the correlation between the M2 of these various different countries and together is so much closer than it is between QE and QT models with the global liquidity index versus crypto. So anyone who's arguing that global liquidity index doesn't really have much of an impact on the crypto price, but in the same breath are telling you that we need quantitative easing and quantitative tightening, doesn't realize that these two things are inextricably linked. The global liquidity liquidity index goes up with quantitative easing and it goes down with quantitative tightening. Bitcoin and crypto, however, go up when M2 goes up because people have more money to spend on these particular assets. Now, if you take these different countries individually, you'll see that they all kind of have a different part where they correlate to, which is why you're probably seeing that some areas fit better than others. This is China. Chinese M2 is surging. Chinese M2 right now is above all-time highs and it's continuing to go up. If we continue to go up here, it's very beneficial. But not just China, let's have a look at others. This is the euro. You can see it topped up around 9th of December, which is pretty much when we had that high for Bitcoin. And in fact, all of the kind of crypto market, you can see had a high around then. You can see that then this comes down along with that. Yes, it chops around a lot down here, but you can see that probably the worst of the dips has been over. The worst of the dip came in on this week on the 10th of March, which is here on this blue line here. You can see that from there, the euro then surges back towards the upside. You can see some of the previous tops, etc., correlate very nicely with the euro prices. Now, I'll be honest with you, I'm not certain as to why Bitcoin closely correlates with the euro as opposed to some months where it's more closely correlated to Japan, to others. But you have to look at this for yourself. Anyone who just writes down below, oh, there's bullshit, it's not correlated, is clearly not putting this on their charts and having a look for themselves. I've told you how to put it on your charts. I urge you to just go and take a look at how closely this all correlates. Now, the question on everyone's lips right now is, are we going to go much lower before we can go higher? What's going to happen with this tariff news, etc.? Now, I don't know, okay? I'm not sat in the White House right now, despite what you might think. I don't really know what Donald Trump's going to do at any moment. I'm probably sure that his wife doesn't know that either. So at that point, you've got to ask yourself, do we really know and should we really be paying attention to that kind of news if we don't know which way it's going? Obviously, have caution. It's going to have a big effect if the tariffs come in bigger than expected versus not so big. I actually think that the fear in the markets is massive right now and the tariffs being expected are huge. Therefore, if they come in slightly lower than expected, it's going to be positive for crypto. I also think, looking across to Twitter, looking at the sentiment right now, it's so brutally bearish, I think we go higher sooner rather than you think. As we can see from the chart perspective, all of these have been heading higher from around the 3rd of March. There will be potentially some chop. It doesn't mean for certain that next week is green and this week is green and the week after, but there's a very good chance that into the weeks into April, we finish significantly higher at the end of April than we do right now. And M2 is so closely linked to crypto prices compared with the global liquidity index, which is more closely linked to QE and QT. I'm going to make a tweet about this slightly later on today, a big thread, so that you can go and read this again and fully understand and digest what I'm telling you here. Make sure you go across and give me a follow on Twitter. Okay, it's Peter_THOC. Make sure it's got the blue check mark. Anyone else is not me. And I'm going to fill you in exactly on the argument here. Now, I know what you're thinking. The correlation between the M2 money supply on a global level and Bitcoin does seem pretty well correlated, you know, just to the untrained eye, from kind of the bottom of the FTX crash onwards. You can see that most of the times we spike towards the upside, the price of Bitcoin spikes as well. Okay, with the exception here because of the ETFs, etc. But in general, it correlates nicely. But you might go across and say, well, yeah, but the M2 money supply continues high until June of 2022, but the Bitcoin price tops out on the 8th of November. And in fact, the total market cap of crypto tops out around then as well. So why does this fall off while the liquidity keeps rising? Well, I'm going to use a story to tell you exactly why this is. And I want you to think of it like this. In 2011, I was at the Royal Military Academy Sandhurst training to be an officer in the British Army. I was commissioning course 113. Eventually, I left and ended up being an officer in the Royal Artillery for around 6 years, leaving as a captain. If that's of interest to you. If it's not, don't worry. You're not going to miss out. Whilst at Sandhurst, there was lots of different arduous events to take part in. Basically as an individual or as part of a team. One of the most famous ones is the Sandhurst log race, which for us took place in around December of 2011. Now, during the log race, you as part of your platoon, which was around 30 guys, had to carry the log around the camp as fast as possible against other people carrying logs around the camp. Now, as you can imagine, it doesn't sound like the most exciting or enjoyable period of time. The log's obviously pretty heavy and lots of people are relied upon to carry the log. Now, it's the log plus sandbags and a few other items, but within the 30-man crew, not everyone is required to carry everything all the time, but it's obviously good if people chip in to carry the log. If anyone's ever watched David Goggins, this is what he means about carrying the boats and the logs, okay? I would imagine. Now, as you run across this course, you run across Old College, you go down through the Wish Stream, your boots fill with water, it's pretty minging, they start to get heavy, people start to get tired, because obviously not everyone is designed equally for running around this course, and definitely not for carrying this particular log. as people start to fatigue, you will start to see certain people drop off. They won't really want to carry the log so much. They'll try and shy away from carrying various items. And this, therefore, starts to pull back on the overall team's performance. Now, this information isn't necessarily recorded when you see the result of 19 Platoon Sun Company at the end of their run, because you'll see the time it took for the log to get round, which off the top of my head was around 20 minutes. But what you don't see in this is the overall performance of the individuals within that team who were beneficial to the log or perhaps negative effect on the log. And this is where this comes in, because this global liquidity index represents the team, the whole platoon. And as you can see, certain elements of this team got a little bit weak and started to drop off the logs. And this is the first little Timmy to start dropping off the log. I can imagine, you know, I talk about little Timmy. Little Timmy was the guy who came off the log, okay? Anyway, as you can see, we peak up here, and then you can see this pulls down here. The Japanese M2 starts to come down lower, puts in this second high here, which finishes on, guess what, the 15th of November. Notice what happens to the Bitcoin price from the 15th of November. It just starts to pile in. So while it looks like the team is going strong here, the first of the little Timmies falls off, it starts to weaken the price. Now we can see the second little Timmy to fall off the log was the Eurozone. Here we can see in the first particular zone here, it spikes, it puts in this high here. And for anyone who argues that M2 doesn't correlate, guys, please just apply this to your charts. Like, it's crazy how closely it lines up, okay? Well, especially once you start to get into the individual ones. Now you can see this rolls over. Okay, it has a high here around the 9th of August, which you can start to see pushing up here. And then on the 8th of November, or the week on the 8th of November, look, it puts in a lower high. This lower high falls off. Guess what? Bitcoin falls off around here. So what's happening is effectively all of the kind of the strong lads on the log, like China, like the US, they're still just left holding the log. They're trying to pull the weight along, and they drive this M2 higher and higher. But you can't win the log race without all the lads on the log. So effectively what happens is the M2 starts to fall off here, and momentum is lost. But it's not that easy to see on this black line. Okay, you can argue that maybe it goes up like this, and it is starting to curve off here. But really, the trigger for this is when the EU and the Japanese M2 start to fall off. This could be used, potentially, to understand where we might see pullbacks in the future. Okay, I am looking all the time to see whether or not we start to get pullbacks on certain M2s going into the future. Right now, you can see the global M2 looks pretty strong. But on an individual basis, are they all looking strong? Well, the Chinese is still rallying towards the upside. Japanese is also starting to push up higher, although has been a little bit weak, you would argue. You can then go down through the list. The euro has bounced back incredibly strongly, has me more bullish than ever, to be honest. As you come through the list, you can see the US is also starting to push higher. As a whole, I still argue that we are going higher because all of these M2s are still on the log. Okay, so what would I do? It depends on you. If you understand what I'm talking about, then great. If you don't, it again, or go and add these indicators to your chart and have a play around and see how closely everything correlates, because it's almost kind of like uncanny about how accurate the kind of tops and bottoms of these are before we see these pushes ups and downs. Okay, and by understanding that, it's going to allow you to have more faith in what's going to happen. Now, in the short term, we do have this tariff news. Does it shape the market? I don't know. Okay, if you are more risk averse, then perhaps you could consolidate towards larger assets. If you think that the news is going to be bad and you don't trust anything here, then go and do what you want. Okay, because I'm not going to convince you one way or another. It's up to you to convince yourself of what you should be doing. Okay, I'm not trying to convince you. I'm telling you that right now, I continue to hold crypto. I'm pretty much all in to crypto right now because I believe in this model and the understanding that I have with this. If it works out for me, then great. If it doesn't, then I have to live with that. But this is the best evidence I have personally to give me evidence of how to act on my own particular ideas and theories. In my opinion, this is the only way you're going to make it in this bull market. So go and wait and find your own theories and solutions to support them. If you disagree with me, that's absolutely fine. Okay, this is all I've done this weekend, is to go and challenge other people's ideas and think about what they're doing and take on board their kind of points, valid or not, to decide for myself what works best for me. So when I say do your own research, I mean it. If you decide that you're bullish and you want to go and buy crypto, then I highly recommend that you use either Bitunix or WEEX. These are two exchanges that I use myself every single day. They do not require a VPN. They have a huge amount of different cryptocurrencies available on them and have some of the lowest fees all across crypto. So if you want to be able to access all these different crypto coins that are going to be talked about as the bull market starts to recover once more, then make sure you sign up for a Bitunix account or a WEEX account, and you can also qualify for a huge bonus by using my link down below in the description. Guys, if you didn't do it already, this video took a lot of time and effort and energy to do, make, record, whatever. Please hit that like button. If you haven't already, subscribe, notification bell turned on, and I'll see you later in another video. Bye-bye.